Hi, I'm Wei Tan. I'm a Manhattan, New York property agent, and this is about property investment in New York. The opening slide here are some examples of our clients' investments. The one on the left here is our client's great pre-war apartment that has a very big 500 square feet terrace. This is the photo of the terrace, and my client got it during the downturn and sold it a few years later for a very nice profit. The one in the middle here was purchased in a luxury building. It was turnkey, so we bought it, we rented it out right away. And the one on the right here is an example of an ultra luxury building. This was at 40 Mercer, and it was very high end, the price was high, and the rent potential is high as well. So high price, high rent kind of example. Let's move on to the next slide. Why New York? Our global clients invest in New York because of the stability of the prices. The appreciation is not going to be very high for those you would invest in the emerging markets, but it's stable. So that is what our clients are looking for: diversification and stability in the asset prices. Now, New York is ranked #1 city globally. It's usually between New York and London, and these are the two alpha plus global cities which are deemed the most international cities, and New York and London are always exchanging places in terms of which is first, which is second. So some years New York is 1, some years London is #1, and so forth. New York is now the East Coast's Silicon Valley. Right now, Facebook is our largest corporate tenant in Manhattan. Google has a second campus. Microsoft just signed space for 100,000 square feet of space. So New York is no longer reliant on the financial services industry only. We are right now a major tech hub as well. Property prices in New York, it goes up in cycles of roughly 7 to 9 years. When there's a recession like 2009, 2010, it dipped by about 10-15%, and then it went up again, and it reached the prior peak in 2017. The condo prices back then were about 2,200, and then it went down. COVID decreased prices by roughly about 10%, and now the prices have recovered from the COVID low. The COVID low for condos would be roughly around 1,700, and right now, as of fourth quarter of 2021, the prices were at 1,900. So it's still lower than in 2017. From that point of view, you can still get some good pricing. The challenge right now is that there's limited supply, so it's a seller's market. COVID-19, I talked about that. It hit in 2020 and it impacted prices by roughly about 10%, but I think it has recovered for the most part. And I talked about the market recovery and the downsides. The downsides of investing in Manhattan, I think, would be obviously A, the price, it's high, and B, the rental yield is low. For an expensive city like Manhattan, rental yields are expected to be low. So the yields here on a cash basis is roughly 2 to 2.5%, which means that you're left with 2 to 2.5% after paying the operating expenses, assuming it's a cash buy. So this is something that you would compare against putting money in the bank or dividends from stocks and so forth. And it's a tenant-friendly city, so it's very important to screen the tenants and make sure the tenants are highly qualified financially, because worst case scenario, having to evict a tenant is going to take a long time, roughly 9 months, I think. And this is a brief bio of myself, and thank you for watching.